Hello dear traders, petar.jacimovic here. Want to post the update on the British pound, and wanted to explain basically the maneuver by the market makers and by the informed traders. Basically, this is a clear example. What happened yesterday and what happening today is a clear example how basically the market makers trap, how they trap on a daily perspective, intraday perspective, how they use the news to fake the crowd, to make them to put them into the bad situation and bad spots. So basically, how they do is I will start with this profile chart. For the new traders, the profile chart is basically the real-time auction based on distribution process where every letter represents a specific time period we observe. What you see here, the whole this area here represent a weekly profile, and this box here represent value, or where the 70% of the trading occurred. The area which is blue one is where we got most prints, and that's represent the point of control or the fairest price, which was traded for that specific period we watch. In this example, the weekly profiles. What happening this week, just the last day of this week, we see that value basically remained actually in the previous previous week range, and we can see basically the point of control is sitting at in the middle of this week, somewhere around 1.3205. So it's given the price is going right now higher due to the news, core CPI month-on-month or core retail sales month-on-month. The value didn't shift higher, and pretty much the point of control will be at 1.3207 here. So we see that a lot of anomalies here in this upward movement, and this may be a task for in the next week to be revisited. I want to explain here again. I'm still shorting. I'm still short from 1.3500 back in a few weeks ago, and stock loss secure in the break even, and I'm still watching potential retest 1.3025 and later on 1.2930 or 1.2800 level. So now I want to back here, and I want to place a signal chart basically, and I hope you can see. So this is the the pound, but 6B on the futures market. So the same instrument we watched on profile, which is a spot price of the pound dollar. Right now we're observing the British pound on the daily frame. So these are daily bars on the futures market. And an interesting point here is that even the price basically went almost 130 pips yesterday, when we got news basically about what happened is basically that Barnier offered the UK 2-year of transition stay in the euro market. Basically, that reacted very positive on the British pound for yesterday, and news traders actually saw this like a buying signal. They bought, but the point is, even the price went 130 pips from that point when that was announced on the newspapers and television. What happened is that you see the volume basically, even this was one of the lowest volume backing many days ago. So you have a large volatility, but no actual real volume transactions in contracts on the futures market. Only 76.5k contracts traded for yesterday. Now, what we see currently is that, look at the current volume. Almost, current volume is about 163k. This is a big volume, one of the largest. We'll see, not the largest so far in the background, but one of the largest. And you know, what we see here is that we so far have a very high effort, but not so good result. I mean, the price, yes, it's positive. We'll see how this bar will finish. If it finishes in the middle or below the middle or well of the high, this is a big sign of weakness. We'll see how this will finish. But in my opinion is that we already have a very high effort, but very weak result. You know, so the price on this kind of volume, you know, it's not looking so powerful, you know, and you know, I see this like a potential big sign of weakness. We need to see how this bar will finish. So this is an early potential sign of the weakness. But be careful in this. You know, we understand the value on the market profile. It's actually didn't shift higher. It's remain in the range of the previous week, and that's something which is actually also confirming that the value didn't shift higher, and that we got this potential sign of weakness on the market. Depend on how we'll finish this as well. But I'm observing this bar to see how this will finish, and if we see finish in the middle or below the middle of the day on this kind of volume, this is a big sign of weakness. We'll see how that will progress. That's just one thing I want to mention, that yesterday on this big range day, so on the futures market from 1.3 let's say 140 level all the way from 1.3 330 level, we got a very strong range but very weak low volume. Okay, so no activity, no real contracts traded. Okay, so that's one thing to mention here. Now I will back on my Forex factory to tell you just what it posted here. So this is my post today, where I said that market makers are playing with the crowd over and over, that I see these situations when there is a good news in media and market makers only cover their shorts. So what's actually happening is the good positioned short traders, basically, they will just cover on this. So as I said, the good news or temporarily a little in the market has allowed market makers to mark up the price into the area where most of the stops have been placed. Keep in mind this is a very, very strong sentence. Okay, I wrote this and I will explain you on the chart, in the real examples, how the market makers play with a crowd using the news to actually you know, to take easier their manipulations. And I wrote here, if there is no good news available, you know, the news media will simply make it up to explain away the sudden up move taking place on any particular day. So they need to say something in the media why this is happening because of this or this, you know. Now I will explain you in the real examples, and I will back here. We'll explain the real examples how manipulations is playing during the whole week on the intra perspective. I will not even speak on the short-term perspective. So this blue line here you see here is represent the whole day in the time. From this line to this line there is a 1 day. From this line to this line this day, and when we touch this line we will finish the day. So these are just period separators which separate the daily periods. Now keep in mind and watch this. What's happening here is that there is a many fake breakouts and traps for the average trader. So let's start with the first one. Most obvious one was first, which was started, and it's happening on this upward trend line. Okay, everyone should see on the regular analysis that this was a strong upward trend line, right? Now price did break this, you know, and naturally we'll expect potential testing of 50 or 61.8, or at least to retest the low. But what happened is that price made a new high, and that was a Actually, the price broke the 2 days high, the previous 2 days highs, and started higher. And I alerted you about this. That the price did a breakout on the easiest session. We started a breakout. Now, first of all, this fake breakout of this upward trend line, basically, what did the sellers entered here? Their stops. Where is the stops of the sellers? Probably above the swings. It can be 10, 15, 20 pips above the swing, and this was pretty enough, 35 pips, to take the stop loss orders by most of intraday traders or some very short-term oriented traders. So the sellers who trade an intraday or so on, and they sold based on this upward trend line, they actually got stop out here. Now, as I explained in my video about the manipulation, it's not just that they got stop out on their selling on the breakout of the upward trend line. What actually happened here is that new buyers enter the market based on a breakout of the previous 2 day high, because you see there's a 1-2 days here, and price started to buy on the Asia session. The London session also was above the previous 2 day high. But what happened, and I marked you about this time the buyers got trapped because the market maker said, okay, let's trap the buyers who bought on the breakout and on the 2 day breakout of the high. And this was a big downward movement which actually took most of all of the stop loss orders by intraday traders who was actually bullish for that day. Even you play stops below this yesterday low, you got stop out, and price clean all of these traders. Now, what's happening next is, because of the mixed news this week, because you have the lot of potential volatility impact events, what happened here is that now when these sellers, when there is a strong downward movement here, sellers who actually trade, and some of them saw the breakout of the low, some of them saw again that this may be a retest of this upward trend line, the price may revisit the low. If they sold here, what will happen? The news came. Okay, as I said, this two-year transition in euro market, which was one of the things. Anyway, what happened, but the price basically went all the way higher, and that was so clean. 160 pips rejection, very fast. In a few hours, 160 pips totally returned. So all of these sellers right now got trapped, and probably their stop loss was sitting here above. So many traps here. Now watch this. Now watch this. That's not the end, because today what we got is the breakout of the yesterday high. And you will naturally say, okay, I will buy here. If you're a buyer there, watch what happened. Market dropped suddenly about 75 pips, relatively fast. And some intraday traders got trapped by buying again based on the previous high. Okay? Now you think, okay, but let's say the price did a fake breakout of the high and price return. Can we maybe back all the way lower because we have a fake breakout of the high and so on? No, because again, if you sold here, we got the news and CPI and retail sales. What happened is that it again using the news to trap and take the stop loss orders by intraday traders, by traders who wants to trade in the days when there is a big news announcement and so on, and then got, if you're a seller here, if you were selling here based on the fake breakout of this yesterday high, you play stop loss above this, you got stop out. So you see 1, 2, 3, there is a many very large traps, very visible traps, how market makers played. What they use like a tool to trap the traders is basically news. They use the news, they are informed, they have the something which you cannot see, they have a very fast informations, they have a different sources, they can have a Bloomberg, they also have a Bloomberg terminals, or all of the, you know, they have a predefined understanding of how they can trap them and how they doing their job. Their job is basically, and you speak about the market makers, to trap the crowd and make the benefit of that. Okay, now if you traded in regular stuffs and pretty normal stuffs, basically nothing wrong to sell after the breakout of upward trend line and so on, you got trapped many times, and many times, and just explain you how they manipulate traders. Many times you got trapped. Now the point is, from the perspective of professional trader, I'm sitting on the short transaction for 1.3500 and I don't have any single more position so far. I'm using the leverage, I'm using control leverage, control risk, and I'm already secured, you know, even from a days ago. But I'm sitting right now, I was 400 pips in plus and more at this point, but because of these circumstances that we got the news, which wasn't, and some few revisions this week, that forced the market making some short covers by professional. Okay, and we got short covering by professional. They cover their good position at short positions. But what's happening is that during these events, they trap you on the regular day perspective, intraday perspective, and many traps on this way, you know, many traps. If I go even lower frames, you can even see more and more traps if you're a scalper. But these are just some major traps that you can easily notice if you observe, you know, because how the average trader will think is absolutely like this. Even if you're if you're breakout traders, you will buy here, you will go stop out. If you're break traders, you will sell here, you will stop out. If you're break traders, you will buy at the previous breakout of the previous day high, you buy here, you got trapped out. Here, you will buy here on the breakout of the high, you may be you also can be trapped. This is how they trap you on the day perspective, and this is why it is so hard if you're not informed, if you rush setups, if you go into the news, if you don't respect the news events, and you are day trading, it's a very hard to actually achieve any good results on the longer term perspective. And the intraday news are absolutely regular. On the daily perspective, you probably always have some potential high impact event every single day, almost every day. There is a days when there is not such a big impact events, but usually you have some events which can impact. Voglio tell it. Now, this is why even if you day trade, it is very important to understand and be informed of what's going on in the market, when is the good time to actually operate and watch for opportunities, and when is not good time. From my and from professional perspective, I'm sitting on the short position. I didn't cover this. I could cover if I want when I saw some few revisions, but I don't need to do that. I'm patient. I will wait. I understand what's going on at this moment, and I will wait patiently and stick with my analysis, which was based on many factors. Okay, on intermarket analysis, it was based on the I watched the futures, I watched a lot of stuffs, I watched indexes, I watched gold and oil, I watched everything, and together with this, what's happening this week. Okay, so traps are everywhere. I'm telling you, traps are everywhere, and don't dream that you can beat the market or stuff like that. You cannot beat, especially intraday perspective, you cannot beat the market makers in their own game. There is no way. You can just follow them, understand their maneuvers, stay away if you see that there is something which they can use to trap the crowd, and then try to play by their rules and try to understand their actions. And you can do that. And I'm teaching you how you can use that in my mentorship program using the market profile, understanding the value relative to the price, understanding the all things we can use there, and using the regular chart, using the also the futures markets, using the different markets to understand the current condition on the asset on the simple way trade. Okay? And again, I will go here and read again. Good news, or a temporal lull in the market has allowed market makers to mark up the price into the area where most of the stops has been placed. It's very simple. If you have most stops on the one way, market makers will catch that if it's relatively tight. I mean, if you're placing stop loss above the swings, 20, 30, 50, 60 pips above swings, below swings, that's a very easy job for them to use the news and volatility of the news to catch you. And as I said, this means that if you have a stops in that area, you're forced to buy away from the true value to cover your perfectly short position. If there is no good news available, the news media will simply make it up to explain away the sudden move taking place on any particular day. And they wrote here the interesting situation of the futures. As we said, we came back on the futures chart. Situation that we have a very relative high widespread of the bar, and we have a very low volume, one of the lowest volume in the past 15-20 days. What this means? This means it's adds more even to the potential trap in the next period. And these current revisions on the CPI and some retail sales, we see that there is a very high activity, but look at the result. Market refusing to go higher, and probably will finish probably, and will finish off the high, maybe in the middle or something. And this will be the big sign of weakness for the further retest of the low on the futures, and as well on the low on the pound dollar on the spot FX market. So I'm telling you that this is understanding the profile. You see, we use that knowledge, we understand the value remain neutral relative to the previous way. Point of control is actually lower for this way. So, nothing is actually still threat for the sellers who position it from this point here, from 1.3500, 600, for 1.3600 or 500. These sellers here are still, in my opinion, holding short position, maybe cover some, but they're still absolutely, these biggest traders and biggest participants are still, in my opinion, short on pound, and they will probably leave this for more further price lower in the next weeks. This is my opinion based on all conditions I saw on different intermarket analysis and understanding of the things, why this happened, why this bullish moment happened. It happened because of that news announcement, something that public saw. Oh my God, something happening with Brexit, 2-year transition in the euro market. Oh my God, there is some revisions. We will buy. But you know what can happen? This first try of the informed traders to start the resell, they can do again that, and now if there is no more news to trade, this can really drop relatively fast. In a 1 week it can drop 400 or 500 pips. That is possible on the pound, so be careful. Buying is very limited, and as I said, this is, in my opinion, on this currency pair, and we'll see how this will be, how we'll finish. First of all, how we'll finish this day. But as I see already, they have a trouble to go and continue higher. A relative normal or average spread of the bar, very high forward, and already we see that there is a fusing going higher. So we're building some weakness, some serious weakness here, and we may see later on maybe some no demand or something, and then potential retest of the low, or maybe even further retest of this 1.2825 on the futures market. So potential retest of the low, maybe a task for the next week, and maybe retest of this even low if we go further and break this on a good volume. So be careful buying pound and watch potential selling, because I've explained, you know, many things involved here. This is how market makers operate, and don't even try to beat them. Don't even try to play with them. The best thing to do is to know when to stay away if you're an intraday trader, and don't usually on the news announcements on something which can have an impact on volatility. You don't want to play around. You don't want to outsmart a market maker, because you not have the same tools they have. They have a very ultra fast millisecond latency news events. They have a different sources events. They have a even predetermined potential numbers which can, you know, we have a percentage of probability which can happen. So you cannot beat them, you know. So you must learn how to understand them. That's the one thing, and then use them in your favor. Watch them how they trap the crowd, and understand your potential advantages of understanding them, so you can use their maneuvers to benefit. But don't try to outsmart the market makers, or don't try to beat the market, because market is here and we are listeners. We need to listen the beats of the market. It's like the music, and the more we understand this music or this business, the better we can listen and the more we can understand. And that's my opinion. So you must be open-minded when you trade. You know, maybe it sounds crazy for you that weakness appears in the up bars, and that value is very important in every market, in financial market. The value is very important relative to the price. One of the basic Buffett rules is, as I said, price is what you pay, value is what you get. So, you know, understanding all of these stuffs, and this whole concept is what I teach you on my mentorship program. So I'm calling you constantly to join, because I see that many traders losing money because they are, you know, trade the regular stuff. They have a limited understanding of the market generally, and the intermarket correlation in general, of understanding the statistical approach, volatility approach, and so on and so on. They trade very mechanically, and that's the reason why it's very hard to create any good long run and good positive success. So if you like this video, if you enjoyed, feel free to subscribe my YouTube channel, leave the comment, and I will put my Skype username in the description of the video, so you can add me and join my mentorship program, become my student. And all I can promise you, I will teach you how to operate individually, and you can even establish your own portfolio and start basically to work on the market in a professional way and understand the market in a professional way. So this will be all for this video. Bye bye for now. Trade safe. Have a good weekend, and next week I will create a video and see how it progresses in this British pound versus US dollar. Bye bye.